Hello, everyone, and welcome to another episode of the Swing Trader Status Update. It's Justin Nielsen here, your host, and he's back with me this week. It's Mike Webster, our senior market strategist and one of the brains behind SwingTrader. So, Mike, this happens sometimes, right? You get the right signal at the wrong time, and we're going to talk kind of a little bit about how we got this great looking buy signal, but do you want to really step ahead of those, the election, the Fed meeting coming up, and everything else? So it's one of those things that is really tricky. But why don't we get right to the charts and dive in? Do you want to start with the NASDAQ or SPY?
You know what? You pick.
Okay, let's go NASDAQ, because the NASDAQ did look a little bit stronger lately. And this got above its 21-day moving average line. One of the things that we were, kind of saying, our asks basically for the NASDAQ, two things. We wanted to get above that 21-day moving average line and above this high from Thursday. And we did that today. In fact, we closed above that. And so even better. Now, if you really kind of consider the Wednesday close as really kind of the high of that day, then we've got a little ways to go. But this was a nice first step.
It was a great first step. Frankly, I was surprised that that the market was able to do this ahead of not so much the Fed, because I think we all pretty much know what the Fed is going to do. We don't know how Powell is going to say what he's going to say and how he's going to say it. But I'm not too concerned about that. But it's really the election is this big unknown that certainly impacts market sentiment in the short term, and then long term, any policy changes, differences between the two sides, that is going to impact the market in certainly different sectors, intermediate, long term. But, you're going to have those knee jerk reactions right away as we find out who wins. Now, we also don't know when we're going to find out who wins. So we were hoping we were going to stay underneath that 21-day until we got some results back, but we were kind of forced to get back into the market. We had gotten extremely light with that bad break that we had last week, and breaking through the 21-day, which is a very important part of our process. When you're underneath that is a very bad sign for short term and intermediate term. And then when you go back above it, you have to listen to that buy signal. Like, we didn't want to, frankly, I just wanted to sit on our hands all day. But with that strength, we were forced in. Now, we could easily get whipsawed tomorrow, if we get, negative reaction to what happens overnight, or if it's just, this is going to be drawn out for weeks, or nobody knows at this point. But you just have to listen to the market. That's what Bill O'Neill, the founder of IBD, taught us to do, is just the thought process that the market knows all, and so we had to go back in the market. We didn't go in heavy, but we wanted to inch back in, so we weren't in cash as you move back above the 21-day. Let's toggle over to SPY and look at that one as well.
Well, you know what? One thing I just want to kind of address, though, is the idea of the market knows all, because I do feel like sometimes there are these situations with these, let's call them binary events, right? Whether it's earnings, whether it's, elections. Now, earnings, it did feel like you used to have kind of that information leak out a little bit, before Regulation FD, Regulation Fair Disclosure, that came out. So it kind of was priced in, but now it feels like sometimes these binary events, you just get the knee-jerk reaction sometimes, and the algos going in sometimes, and just reading the headline and reacting very quickly, faster than any human could do, and it just kind of ends up moving things around. So I guess, I wanted to, before we go to SPY, because this is definitely part of the conversation, is part of our positioning was, okay, we're going to be lighter, because not that we think that the market's going to tank, not that we think that we know who's going to win the election. And, even if we knew who was going to win the election, doesn't mean we know what the market's reaction is going to
be. Not even a little bit.
So, you can give me that headline and I still don't know. But I guess the biggest fear was that we wouldn't be able to hold, in either case. Like, no matter what happened, if there's enough of a whipsaw to shake you out and then still go up, what good does it do if you're right if you can't make any money on it because you get shaken out?
Exactly, and that's why we had wanted to go light, not so, more so for that shakeout that you were
Mhm.
talking about, because we didn't want to be in the position to be heavy going into this big binary event. Because if you are swing trading, you have, by definition, you have tight stops. And so when you get a whipsaw, especially with a binary event, it would have got us out. And then we would have to, probably early in the day, and then by the end of the day, you would have to be chasing and getting back in. And so we are trying to avoid that by going super light, coming into today. And it kind of worked nicely with the fact that we had such a bad break last week, because just even if you didn't have the binary event, we would have been getting
Yeah.
much lighter because of that. Let's say there was no election, there was no earnings, there were no Fed this week. That with that same action, a bad break like that, going slicing through your 21 day like it wasn't even there, closing at your lows. And, as you mentioned, as bad as that bar looks, it's actually much worse because it has a gap in there. So it's kind of, it plays with your eyes a little bit, because yeah, if you could draw that up to the top, yeah, that's really what that bar was. And if you're swing trading, you've got to take action on that on a day like that, because those tend to get followed up with further selling. But what I think happened,
And
and
just for a point of reference, I
right
mean, I
there,
think we all remember the beginning of August and the beginning of September, which, I mean, it looked like that's exactly what could have happened here. Yeah.
yeah, and it felt like that was in the cards, and so we adjusted accordingly. Now if you're position trading, you can be a little bit more patient and maybe wait for the 50-day before you do, a lot of lightening up. But if you're swing trading, which is what we talk about on this show, that you need to react faster on both sides, both on the way out and the way in. It's just the nature of that style of trading. So that's why we had to take the defensive measures that we did, and it was the right thing to do. And then you have a day like today where if you have an instrument and your instrument goes green, you've got to listen to it. If you have an instrument and an instrument goes red, you've got to listen to that as well. So with a move back above the 21 day, now our low is not above the 21 day, but you
Mhm.
do take action on a cross, a decisive close back above the 21 day, which is what we had today. It's certainly decisive, closing at the highs, not just inching through the 21 day, really through it. Um, and so our expectation is to move higher. But really, like, with the election night, anything can happen. It wouldn't surprise me, to be up 3% tomorrow or down 3% or anything in between. Um, and with that, we just wanted to be on the lighter side. We wanted to listen to our instruments, but we wanted to kind of dial it back a bit. So we kind of found this place in between, rather going as heavy as we really wanted to go. But we were cognizant of the potential whipsaw, so we just dialed things back. And so, if we gap up tomorrow, we have some exposure. If we gap down tomorrow, we don't have as much exposure as really I'm feeling like I wanted to have.
Yeah, we definitely have a lot of cash. And I will say that, as I was on the SMT video with Ali yesterday, I was saying, if I could order a scenario, what I probably would have liked to see was an undercut of this level right here, support at 18,000 and the 50-day moving average, and then a move up. But as we've probably learned, the market doesn't usually give you what you order. They
I was hoping for that. We didn't even talk about it, and I didn't get a chance to watch that one yesterday. I was tied up, but it was that's exactly what I was hoping for,
Mhm,
and that was kind of in the cards. That's how that would have been normal and natural.
mhm.
Let's go over to SPY for a
Yeah,
second,
let's do that.
because this one did come down and touch the 50-day. And I think that guardrail is what kept the market up. The fact that the bears weren't able to push it through that level that was just right there. I mean, intraday just like kind of poked around it just
Mhm.
a tiny little bit, but not really much. And everyone doesn't pay attention to the 21 day. Only it's kind of a niche audience of people that do, but everyone pays attention to the 200-day, which is your black line, and then the 50-day, the red line. And so, especially SPY getting support there, that was your first sign that, hey, maybe this market doesn't want to go down. And if SPY was going to, break the 21 or break the 50-day, then probably the scenario that you're talking about with Nasdaq coming down to its 50-day was really going to be in the cards. But this one again, this was the one that had been leading for some time, really since July. This was our leading index,
Mhm.
leading broad index. We were also looking at the RSP and the New York Composite, but this one was able to get back above its 21-day. In fact, let's toggle over to the RSP, which is the equal weight version of SPY.
Yeah. And we didn't talk about it, but just kind of going back to the Nasdaq, you can kind of see how the relative strength. This is where SPY or S&P 500, it was getting to new highs first. It was crossing the 50-day moving average line first. It was crossing, these important levels first. All of those things were happening on SPY first, and to a degree, RSP, for a while there was showing some decent outperformance in August versus the S&P 500, but then it kind of fizzled out in September and October. So, what is this telling you now that we had a few days where it seemed like the 50-day moving average line, it just couldn't stay above it, and then now here we are above both the 50 and the 21.
Yeah, so this is something that we certainly could have, done something with SwingTrader today, and we were talking about it late in the day, and you made some very valid points that it eats up a lot of capital for a single ETF, and even though it looks like it wants to go higher, there's probably better either it's better to keep that cash and then put it in something that we think is going to really lead and use as more as a tool to observe and interpret the breadth of the market. And how I'm interpreting this is it was looking like it was going to start going into a downtrend. And let's just, look at a uptrend on a basic level is higher highs and higher lows. And then the reverse is a downtrend. And so we were starting to get lower lows because we broke that 176.41, but we just did it by a hair. So
Mhm.
it's technically a lower low. I mean, you don't want to argue. Bill would say no excuses, no alibis, but there is that gray area there where you want to look at it in more than a touch of gray. It's there's all shades of gray when you're looking at the market. Like, did that break in a very material way or not? And it didn't. It just came in right underneath that 50-day, right underneath that 176.41, and kind of found logical support there, and now is able to move back above its 21 days. So even though we're not trading this is a good sign for the market that it feels like it wants to go back higher. What will be important is if it's in an uptrend, it needs to take out that 182.22 for it to truly get back up into an uptrend, because then that would be a higher high. And then, of course, as it pulls back, if it makes it up there, then the pullback, you would want it to be higher than this recent low that we had here. And then that would put it back up in an uptrend. So right now it's set up for either chop, flat, or down, based on the fact that it's undercut that until it gets back above the 182.22. It's in this no man's land. But the fact that it was able to get back above the 21 day is the first thing it needed to do to get to the 182.22. That's a long way of saying this is how I like to look at breadth, because it's your average stock, your average big stock, and it's still holding in there, but it's not super powerful, but still still healthy, but just with a little bits of problems, not
Mhm.
major problems.
You know what? Let's shift gears real quick, and we can pull down the market search chart. And why don't we go to your regression channel lines?
Sure.
Because again, one of the reasons why, that in an ideal world, there's like a certain way the market would act, and it certainly felt like on the Nasdaq, regression line, we got that ideal situation where it came right to the regression line. That's the green solid line at the bottom there, and got support right where you'd want it, bounced right where you'd want it. I mean, it's pretty picture perfect there.
Yeah. So again, if someone has never seen one of these regression lines, this is something we go over on every Friday's SMT video, and we went over this together last Friday. And the solid green line, as you mentioned, that's a one standard deviation below your regression line. Your regression line is a white line. That's your line of best fit, and it's just from the data points from August 5th, 50 trading days out, which put it out to October 14th. Um, it's just saying, what is that trend? And these different measurements from there. What is normal and natural? And what's normal and natural is kind of stay in between the two dashed lines there. The extremes are your solid lines, which are one standard deviation above and one below. And how I like to use this is when you come down to your one standard deviation below your green line here, and I'll just blow this up a little bit. Your thought process is if it can get back, show enough power that it can get back up to the minus 75, 0.75 standard deviation, so 3/4 standard deviation, which is this dashed line here, that then it's going to be kind of a slingshot back up to your white line or your regression line. That happened back over here. You can see early on September 11th, you move through that 0.75, and then right away within a couple days, you were back up to that regression line. Eventually, you went up to half a standard deviation above that, kind of ran into some problems, came back to kind of its home base or its equilibrium point, which is this white line. Like that's, if it's in a trend, it wants to go back into that kind of that's its happy place. And so is it going to get back up there or not? If we didn't have the election hanging over us, we would have been gunning as super hard, because this is kind of your classic setup of this is what it looks like before it gaps up to your, or has a big powerful move right up to your white line and then past it typically. But because we have this overhang, we kind of had to temper ourselves a bit. But this looks ideal. Now, on the flip side, SPY was a bit weaker in that it got well underneath that the standard deviation, the one standard deviation. And as of yesterday, its high was well underneath that as well. So it was looking like it was breaking, and we had, commented, I think, on IBD Live, or at least internally, that we, just one or two more days left, and then this one was going to have to be a dead trend, meaning we would need a new trend. But because we've made it back up, almost up to the one standard deviation there, that if this can power higher and get through this the 0.75 line, the dash line there, that's when we're going to gun it really hard, because assuming if we get there, we know more about the election results, or at least the market knows enough to get us there. That's the assumption that we're
And that's
working.
kind of what we're looking for right now. Again,
Yeah,
not so much who wins, but resolution.
exactly.
It's the uncertainty a lot of times that the market doesn't like. And to that end, this is one of the things we've been saying, where sometimes having the opposite party in the White House versus Congress, is good for the market, because rather than uncertainty of what's going to get passed, it's kind of like, oh, probably not much is going to get passed, so it's kind of the status quo. So
Yeah,
again,
Bill would
that's
always,
about as political as we get. You're right. When
yeah,
we're doing this analysis for the market, it's really what what does it mean for the market at the end
Yeah,
of
you always want to have kind of two hats. Your personal hat, and that is your political beliefs and your hopes and dreams for whoever is going to win. We all have that. You keep it to yourself. You try to compartmentalize that from your trading. And then you just look at the trading and just go, okay, even if my team doesn't win, that's fine. What does it mean for the market? And as you were alluding to, if we get a kind of a mixed government, you get red on one side and blue on the other, then nothing much gets done, or really the more intelligent things get done, because those are what both sides, kind of the center, can agree on.
Mhm.
That's historically what the market tends to like. But it really, I think it's just a resolution, and
Yeah.
it's just knowing that, okay, now we can plan. If she gets in, this is what we can expect. If he gets in, this is what we can expect. Everyone can put it in their models and their spreadsheets, and then we can just move on to the next issue. And there will be another issue to worry about a month
Right,
from
there
now.
always is, right?
Yeah,
I mean,
so
for the last 2 years, it was when is the Fed gonna
yeah.
start cutting, when are we gonna get inflation under control, and can they nail the soft landing? Now, as soon as we got our first rate cut, we had something else to worry about, and I
Yeah,
mean, let's not forget that we've got an earnings season in the middle of all of this too, so, yeah, there's always
yeah,
something.
and Powell on Thursday versus on Wednesday. So market mechanics, that changes a bit, because normally you get it late in the day on a Wednesday. You'd have Thursday and Friday for the market to digest all that. Now we're going to get that late on a Thursday and only have Friday to digest that. So Friday is going to be a very big and important day. But I frankly think that my interpretation of Powell is probably what the market's interpretation, that he's got this now. He's going to, he'll do a quarter point, and then as long as he doesn't mess up, say something silly, and I really don't think he will. That I think he's got this under control. It's all about his legacy, and he's made it this far. He doesn't want to mess that up. So I don't think the risk of the Fed doing something wrong is an issue anymore. I really
Mhm.
don't, and we'll see. Maybe I'll be wrong, and he'll screw up, but I don't think so. One last thing on these regressions is
Oh,
the.
sorry, I moved on.
Oh, I'm sorry.
Yep,
Okay, don't worry about it.
we can go back,
Okay, if you don't
um,
mind.
yeah.
Okay, I just wanted to show the RSP, which
Mhm.
was the equal weight, and this is what got us a bit more defensive. Is this had completely fallen out of that regression and was way down here. Now, even with today's big move back up, it's still nowhere near this trend. So we're probably going to need to find a new trend there. And one last thing I wanted to do was, this is something that both of us talked about on the SMT video on Friday, was the 50% retracement on SPY and the Nasdaq of this recent little pullback that we had. So using the high from the 30th and the low from the 31st, that puts us pretty much. This is our midpoint, that the 18,434, that gold line there, and we got back up to that today. So just getting up to your 50% retracement is your first step that you want to get to, but living above it is when you know that you're back and you're healthy again. So we want to see it trading in this zone to know that we're really out of the woods from there. And then let's look at SPY as
It's kind of
well.
like when you have a cold, right? There's that time when you're like, I'm not, I can still go to work, but man, when I get home, I'm going to sleep. I'm not going out. It's,
Or like
you're still
having
feeling a
COVID
little
and
under the weather.
yeah, or like having COVID and doing chart school, but
Right.
that's a topic for another day. So SPY is a little bit shy of that. Now we're using a different one. We're using the high from October 17th, but the same low, the Halloween low. And we're not quite there yet, which is another sign that of why NASDAQ is a bit stronger. And that's all we have to do with these charts. So you can take control again.
Yeah. Okay. So let's go ahead and we'll just real quickly shift over to kind of the change that we had in our pie charts over the last week. Certainly when we were last discussing our exposure levels, we had a decent amount of cash that we were hoping to, deploy if the situation was right. But we were fully expecting that we were maybe going to be raising a little bit more cash ahead of the election, and that's what we did. Maybe a little bit more than we were initially expecting. I don't think we were
Yeah.
planning on going down to 7%, but it looked like it could get a lot worse. So this is where we were at last week. Still a very heavy exposure to ETF. We had chips, we had some crypto, we had some retail, we had some medical, we had some leisure, we had some international. This week, the notable thing is how much cash we have. And again, that was after quite a bit of buying today,
Yeah.
actually. More buying than we normally would, do in a single day. But again, we just didn't want to be off sides too much. If things rip from here, the last thing you want to do is, have to chase things because you're you don't have anything. And so that means you're going to be chasing things, as opposed to, okay, we were kind of talking about maybe going 50% as a target today, because if we rip, yes, we're not going to be fully participating, but we're going to have quite a bit of participation. And if we really fall apart, yes, we're going to come down, but we're going to have a lot of cash that would protect us. So anything to kind of add on the pie charts here?
No, I mean,
Targets?
I'll tell you, I probably would have been a little bit more comfortable if we could have gotten up to 50%, but we're also trying to be cognizant of, everyone's trying to follow the alerts. And, we were doing a lot of buying in one day. And that tends to be something that you don't want to do. There are rare occasions where you you kind of have to do that. And that's why we're being kind of preemptive today, at least getting us, into, the 40% range. And then look, if we have a strong day tomorrow, then we're going to just have to ramp it up. But we're trying to do it as measured as possible.
Mm-hmm. And even though we have ETF up at 15%, again, that's our SPY and our Q's exposure. We still have another ETF with the crypto. That was looking strong with IBIT. Let's go ahead and why don't we pull up some charts, because I think one of the notable things of the last couple days is that there were a number of setups that were kind of looking interesting. So I'm going to go ahead and I'm going to switch back to my chart, market surge, and maybe we can look at some of the things that were looking interesting. So I mentioned IBIT. I mean, that kind of closed in the mid range, but still,
I do have a position in that,
and I do as well. We sold ours in order to put it on, and then bought it back 30 minutes later, or not 30 minutes later, because we both forgot, and then so it was more like an hour later we bought it back. So closed off the lows, but a strong bounce off the 50-day moving average line.
Yeah, so I like this.
Excuse me.
Yeah, I like this setup because we know that we're wrong, really. With a from a swing traded standpoint, with yesterday, if we take out yesterday's low, so it looks, you got a nice little downtrend here over the last week. So we could have waited for it to penetrate there, but we wanted to get in earlier than that. If it goes up and takes out last Thursday's high or gets close to it, we'll probably add to this position. And but this is one of the ones that might move on the election news as well. That's why we didn't want to go too heavy. But it looks like money is flowing into this space, and so we wanted to have a toehold.
Mm-hmm. And again, we started with a half position in this case, but that gives us, room to certainly add with that toehold, as you said. So this starts going above 40, 41, then hey, yeah, we're going to, potentially add to this one. Let's also talk about one of the, other ads today, ISRG, Intuitive Surgical. Another one where we had this really strong move off of earnings above 500, kind of clearing all this level right here. Went sideways for a little bit, but pretty tight action, holding the bulk of those gains, getting support right there at the 21-day moving average line, as well as this 500 level. Kind of looked picture perfect. I actually bought it here and then quickly, got out of it again. I think we put it on SwingTrader there too.
Yeah, I,
And
I I did the same trade as well. I followed what we ended up doing, and I would
yeah,
do that same. Some trades you look at it and you go, "Oh, geez, why did I do that? That was silly." Other trades you're like, "Yeah, I would do that again. I would do that same trade again." You had an upside reversal after holding in tight, and I think, frankly, the market just wasn't ready yet, and
mhm,
so it wasn't wanting these things to. The earnings results were good, but not good enough for it to just rip and continue higher like we saw with like an A Lab or a Palantir. Um, but this is set back up, and I did buy a position after we put it back on the list today. And if the market works, this should go through the 522.34, really quickly. That would be normal and natural. And if it starts heading in that way, we'll be adding to it. But this looks like I think you said a picture perfect setup. They don't all work, but these are the ones that you want. These are the trades you want to take because you know where you're wrong. The 21
mhm.
day is just right there, right around the 50-day, right around the lows from last week. So you get a logical stop to know when you're wrong, but it should, you got earnings behind you. Like it's got everything going for it. Doesn't mean it's going to work, but you try to put the odds further on as much on your side as possible.
Yeah. And this is where I like poker analogies because, certainly, when if you're playing Texas Hold'em and you've got pocket aces, that's the best hand that you can have. But as you said, that doesn't mean they always work. That's the picture perfect hand to start with. But what happens? Well, you get three more cards. Now you have more data. That kind of changes how good your hand is. And then you get another card, then you get another card, you've got people betting in between. So there's all of these different data points that kind of change the way you might view those cards. And again, there's a level of uncertainty there that you have. You don't know for sure. You're just having to go with the odds. And that's kind of what we do when we're trading. We can see something picture perfect, but we know going in, hey, this isn't guaranteed to work. There's no such thing as a guaranteed, stock going up. It's just I haven't found it in all my days. So you always have to be ready for the downside. That whether you call it a bad beat or just bad luck, it happens. Where a picture perfect setup will just not work out for you.
Yeah, I think Forrest told us about that.
Right. You mentioned Palantir and A Lab. So again, we don't have these on SwingTrader right now. Probably in looking at the ATR, probably a little bit,
Mhm.
too wild for us. And certainly, again, we had earnings coming up, so there wasn't really anything we could do ahead of earnings. Especially with the market in the situation it was in, with all these events coming up, and especially the earnings coming up. But both of these had really strong reactions to their earnings reports. Palantir up 23%. Astera Labs, A Lab up 37, almost 38% for the day. So really strong reactions. And there have been a number of these. Look, there have been the stocks that have gone down tremendously, but there have been some really big movers on earnings this season.
So I look at these really as a gauge for the health of the market. And as you said, you're going to have the blowups, but we haven't been seeing a ton of blowups. But the what's been happening is a lot of the gap ups will like gap up and then they'll kind of go sideways or drift down, and you're not getting as much follow through as we'd like to see. And then we saw that with the ISRG that we were just looking at. You had that gap up and then it just kind of drifted, and it perked up today. But the A Lab, I mean, yeah, so you would have wanted a little bit more of a move there with ISRG, frankly. But with this A Lab, a function of a few things. One, it's a recent IPO, so you have, the big institutions don't have their full position or anywhere even near their full position yet. Um, and so they're having to
And
build.
surprisingly, I should mention that for an IPO, this does have quite a bit of sponsorship amongst our IBD mutual fund index ownership, including Fidelity Contra Fund, Invesco Discovery, Alger Small Cap Growth, and Lord Abbott. So pretty
Yeah.
impressive there.
So the thought process is, as this earnings result, came out, that they're probably either adding to it today or have plans to add to it. That's because from a fundamental standpoint, now the fundamentals are better and they're up on their position. So why wouldn't they want to add to? Because they're not swing trading. They're the opposite of swing trading. They're in there with low turnover goals and to try to hold things for for years. So they'll probably try to build a position, and we'll see if it ends up working out or not. It looks like it really wants to work out, but you really couldn't do anything from a swing trading standpoint with this, because between the gap up, you couldn't have bought it before the earnings because of just stepping in front of that freight train. It could have, if something gaps up and moves up 37%, it could have easily come in that much. And then on an intraday basis, if we would have, bought it around 90 or so, that, you could make that argument midday as it was going over that area. That could have been something that we would do, and maybe it's something that we should study from with a swing trader hat mindset on, and see if we want to start doing that with the product or not. But
and maybe with as you say, with more chips and a different time, again, without some of these events staring us in the face, that might have been something where we would have taken a flyer with something with this kind of ATR, average true range, something that moves this much. Maybe that's something we could have done, but I don't know that in this environment either one of us had the guts for it.
No, not. I was talking in general, like when we don't have
right, exactly.
when
Yeah,
we don't
I'm
have
just clarifying.
this overhang.
I knew what you were saying. I'm just making sure everyone else kind of understands the environment that we'd have to be in.
You are my translator, and I appreciate that. We've known each other since like '98, so you know what I'm going to say before I say it, and vice versa. So, anyways, this is, if you're in this, I had it personally, but I sold it before earnings just because I frankly didn't want that risk, because it could have gone down 30%. And frankly, not kicking myself for not owning it, because that was this. I'd make that same decision again. So now it's just how to get into this. So hopefully this will. Let's go to Netflix, for example. It's not a perfect because it didn't have that type of power. But what we're hoping for is after a gap up, and this was just like a baby gap compared to that what we had with A-Lab, what happened with A-Lab and Palantir. But you have that gap up, and then you end up tightening up and going sideways. And we did put this on the list, and I did buy some today after the 30-minute window. In this, very similar to the ISRG, looks like it wants to move higher. So we're hoping that A-Lab will do something like that over the next few weeks, tighten up, give us something to trade off of, so we can do something from a swing trading standpoint. But regardless, it's just a good thing for the general market when you have these big gap ups in kind of the heat, the high octane names that gap up, and if they can hold and not just give them all back. And those two don't look like they want to give them all back, but we don't know how the market's going to play out in the near future. But the more kind of the mosaic of this earnings season, I would say, is a positive one, but it's not one where things are getting too crazy, or as one of our colleagues likes to say, it's not a giddy type of market.
There have been a lot of these pauses, like we saw with Netflix and ISRG. And in case I didn't mention it, I do have a position in Netflix. I do have a position in ISRG, and I do have a position in IBIT, as well as SPY and Qs, different leveraged versions. I do want to address
I've got all those same positions.
And I do want to address one of the questions that I saw on YouTube. Someone asked on the pie chart, when we're looking at that exposure in ETFs, since we're dealing with some of the the leveraged ETFs, SSO for SPY, which is a 2x, QLD for the Qs, which is a 2x. Are we double counting that weight? No, we're just treating that weight as, okay, this is the weight in that position. And the reason is because, especially with those leveraged ones, the leverage makes them act a little bit more like a stock. It puts the ATR a little bit more in the position of a stock. But actually SSO is our lowest ATR. Even though it's a double, it's still our lowest ATR, average true range.
Yeah, just like the 21-day ATR on it is just like 2.08 for a double. That's really small.
Yeah. So
So
yeah, very, very small in that regard. So good question on that. And I think that's going to wrap it up for us this week. So thank you very much for tuning in, everyone out there on YouTube. We're going to have this up and available for the archives if you want to review it. Go out and vote, and let's see what happens in the market. Be open again for the market to go either way. And again, no matter how much you have kind of like, this is what I think is going to happen, be ready to go the other direction, because, we don't know.
I just want to say one thing, that once this election is over with, just hopefully all of us can, on each side, can come together and be a more unified country, because it's very divisive. We don't talk about that here. And just, be kind to strangers, go out and vote, have your political views, but don't fight with others, and, play nice.
Play nice. Okay. Very good. Well, thanks again for watching this week, and we'll see you all next week. Bye-bye now.